Did you know that the South Sea bubble was so massive that it caused some of the wealthiest people in Britain to lose everything, including politicians and nobles? It was a financial disaster that shook the very foundations of the British economy. In this video, you'll learn about the South Sea bubble, a financial disaster that struck Britain in the early 18th century, setting a precedent for future financial scandals. The South Sea bubble is often referred to as the first major financial scandal in British history, and its impact was felt across the entire nation. But before we dive deeper, if you're intrigued by the darker side of political finance history, check out our exclusive political-themed designs at histoedutainment.com. Our unique merchandise pays homage to the stories of greed and deception that have shaped our financial landscape. The story of the South Sea bubble is a fascinating one, full of greed, deception, and financial recklessness. By the time we're done, you'll understand how this bubble formed, how it burst, and what lessons we can learn from it. So sit back, relax, and get ready to dive into the world of 18th century finance and uncover the secrets of the South Sea bubble. We'll explore how the South Sea Company promised immense profits from trade in the South Seas, but ultimately misled investors, resulting in a massive economic crisis. The South Sea Company was granted a monopoly on trade in the South Seas by the British government, and it seemed like a golden opportunity for investors to make a fortune. The company's proposal was simple. It would trade with the Spanish colonies in South America, exchanging British goods for silver and gold. The idea caught on like wildfire, and soon everyone from ordinary shopkeepers to wealthy nobles was clamoring to invest in the company. As the company's shares began to rise, investors became more and more optimistic, convinced that they were onto a good thing. The shares kept rising and people were making a killing, or at least they thought they were. Speculation was rampant, and people were buying up shares left and right, convinced that the price would keep going up. The hype surrounding the South Sea Company was so intense that it seemed like anyone who didn't invest was missing out on the opportunity of a lifetime. Some investors even took out second mortgages on their homes to invest in the company, convinced that they would be able to pay off their debts with ease once the profits started rolling in. It was a classic case of irrational exuberance, with people throwing caution to the wind and investing heavily in the company. Now, we will delve into the details of the South Sea Company's formation, the speculative frenzy that surrounded its shares, and the societal impact of the bubble on British society. The South Sea Company was formed in 1711, and it was initially intended to help pay off the massive war debt that Britain had accumulated during the War of the Spanish Succession. The company's founders were a group of wealthy merchants who saw an opportunity to make a tidy profit by trading with the Spanish colonies. They convinced the British government to grant them a monopoly on trade in the South Seas, and the company was born. As the company's shares began to rise, the wealthy elite of Britain started to take notice. Politicians, nobles, and wealthy merchants all invested heavily in the company, convinced that they were onto a good thing. The speculative frenzy surrounding the South Sea Company was so intense that it started to affect the entire economy. People were spending money they didn't have, buying goods they didn't need, and living far beyond their means. The social impact of the bubble was significant, with ordinary people living in the fantasy world of easy wealth and luxury. The bubble created a sense of false prosperity, where people felt rich even though they weren't. The wealth generated by the bubble was also highly unevenly distributed, with the wealthy elite getting richer and richer while the poor got poorer. It was a classic case of the rich getting richer at the expense of the poor. In 1720, the South Sea Company's shares finally reached their peak, and then suddenly, they began to fall. Panic set in as investors realized that they had been conned. People rushed to sell their shares, but there were no buyers. The shares continued to fall, and soon the company was on the brink of collapse. The collapse of the South Sea Company sent shockwaves throughout the British economy. Banks failed, businesses went bankrupt, and thousands of people lost their life savings. The government was forced to step in to prevent a complete economic collapse. It set up a committee to investigate the collapse of the company and established a fundraising program to help those who had lost money. The aftermath of the South Sea bubble was devastating. Thousands of people were ruined, and the entire economy was plunged into recession. The bubble also led to a loss of trust in the banking system and the government, which took years to recover from. The South Sea bubble is often referred to as the first major financial scandal in British history, and it taught us some valuable lessons about financial regulation and investor behavior. Firstly, It highlighted the importance of regulating the financial industry to prevent reckless speculation and deception. The lack of regulation in the early 18th century allowed the South Sea Company to get away with its fraudulent activities, and it led to catastrophic consequences. Secondly, it showed us the dangers of irrational exuberance and the importance of due diligence in investment decisions. Investors got caught up in the hype surrounding the South Sea Company and forgot to do their homework, leading to devastating consequences. Finally, it demonstrated the importance of diversification in investment portfolios and the dangers of putting all one's eggs in one basket. If investors had diversified their portfolios, they would have been better able to weather the storm when the bubble burst. If you found this story intriguing, make sure to check out my video on the history of stock market crashes and let me know your thoughts in the comments below.